Hiya, hello.
Hi, Michael. How are you?
Hi, not too bad. Thank you so much for coming. Make sure I got my notes. Thanks very much for coming, everybody. I hope you can hear me okay. Can I just go another second for some people with some audio? Just go another second. Hi, George, you cool, man? Oh, you can't see me. Wait a second. Hold on a second. Oh, hello. Wait a second. I can't hear you. You can hear me. Okay, fine. Cool. Okay. So I'm going to talk about there's 4 topics for today. So I'm going to talk about a theme, an overarching theme, which I've titled this talk "Going Nuclear." So the idea here is that in the market, the best ideas are the simplest ideas. So this is a theme that I'm going to describe with the punchline. I'll just get to the punchline at 2 stocks that I'm recommending, which is Uranium Energy Corp and POWL Industries. And then I'm going to talk about how this fits into the overall portfolio. And then I'm going to finish up with some free tips that I believe are really, really important in investing. So just before I get started on my little amble, my little chat, is there any questions that anyone wants to ask right away?
Hey, Mike, I haven't finished reading your LUNR trade alert. I don't know if you want to touch base on it. I was at the point where you were mentioning about that there was lots of insider sell-off.
Mm-hmm.
That's why the price went down.
Yeah, so I'll talk about this right now.
Thank you.
The ticker is LUNR, which is LUNR. The company is called Intuitive Machines. And this is something that I'm going to be moving towards in terms of the service, deep value returns. I am going to be picking up occasionally these businesses where there's something extraordinary going on. I'm not going to be, in early 2024, I recommended Meta because I felt that there was a potential inflection going on there. And I believe now that I can do better than that. I'm not being big-headed, but if you work really hard, and this is we're going to talk about, you can find stuff. So Intuitive Machines, they have a service. The service is LUNR Exploration. They're a relatively small business, 1 billion market cap. And they're growing really, really fast. The problem is twofold. Number one, the management, including the independent directors, have been selling a lot of the stock in September, a lot. And despite Intuitive Machines getting a massive contract, which I'm going to discuss in a second, the selling hasn't slowed down of management. So investors are worried about that. That's the first aspect that is a bear thesis. The second is that this business, not like, unlike some of these bigger players like SpaceX or whatever, or even, there's some other names in this space. They are still unprofitable, but worse. I'm not bothered about the unprofitability, but worse than unprofitable is that their gross margin is negative. So a lot of the peers that I've looked at trade at about, in the ballpark, of 6 to 8 times forward sales. But as I said, they're already more established. Intuitive Machines trades at about 1 or 2 times forward sales. It's kind of difficult to kind of get a good gauge here. And I'll explain why. So what's particularly interesting about this business is that up until last week, it was a relatively small business with a market cap of 500 million. And they got the contract by NASA for $4.8 billion. Now, this is the maximum length for the contract, 4.8 billion. And they will get immediately 150 million, which is obviously peanuts compared to 4.8 billion, but the 4.8 billion is as used. So as the service is used for the commercialization of lunar exploration, as it's used, that will drip it out of the contract. So the contract is done in a way that it can either be used all up within the 5 years, or it can be extended out for the further 5 years, depending on if they haven't really gone through all that money. But this is not the first time that NASA has awarded a contract to Intuitive Machines. It is in the last 3 months, this is the second contract, and they had a smaller contract in August, which was peanuts compared to this one, it was about 100 million. And they had a contract, if memory serves me correct, about 12 months ago, which was also about, I think, 90 million or something like that. So they've had some types of contracts coming from NASA over time. Obviously, this one is massive. Now, I'm of the opinion that NASA wouldn't be willing to throw this amount of money at a business unless they suspected that the business would be economically stable, because no one wants to throw that kind of money, no matter how big you are. No one wants to throw that kind of money around unless it's going to do something with it. You're not going to throw this money and then the company's imploded. But if you know anything about my style of investing, I call it inflection investing, is that you need to understand. You don't need to overcomplicate things. People love to believe that to make money in the market, you have to be really smart and know loads of stuff, and that's nonsense. What you just need to know is a few things, and these really take just a couple of minutes, really. You just have to understand the financial balance sheet. It's not a lot, just look if the business has debt. If there's a lot of debt, you don't need to get involved with that. You can leave it for someone that's quite intelligent, not me. And, if the business has some debt, but it has some cash, then things can get interesting. Or in the case of Intuitive Machines, now they've paid back all their debt. They have no debt. They're debt-free. That's kind of interesting. You don't need a quote unquote rocket science to kind of understand that, hey, debt-free, good things may happen. Now, the business had been growing at about 200% year over year. Okay, so it's like growing really fast. But here's the caveat. It's difficult to extrapolate this type of growth. And if you look at their backlog, the backlog had been coming down. Backlog is a forward indication of revenues to be recognized. That sounds like a mouthful, and I apologize for that. But what it means essentially is that it says, okay, there's going to be money coming down the pipe. So if backlog is increasing, that is positive. If backlog is stable, that's kind of question mark. And we'll come back to the backlog aspect when we discuss POWL Industries. But if the backlog is coming down, that's that's not good. So up until the last quarter, which was reported, the results until the end of June, the Q2 results, the backlog was coming down. But if they have this massive contract coming in now, starting in the month of October, that means that even if it doesn't get recognized in the backlog for the Q3 results, when you talk about the earnings in 4 weeks' time, they will say, hey, we have massive amount of backlog and it's going up, and I believe that investors will rally behind it. So coming back to the aspects of insider selling, if you look on the proxy statement, it's difficult to estimate, but I believe after all the selling, management has about 15% of the stock in the company. Okay, so after all the selling, it's difficult. It might be 20%, but I'll just say let's go with 15% just to kind of give us some some margin of safety. I think that this is really important when it comes to investing. Thinking about where you're wrong. A lot of people like to look at investing as where you're right, and a massive mentor for me, Charlie Munger. And I'm not just saying that because it sounds cool, but like Charlie's been much more of a mentor in my life than Warren. He always says invert, so like what is going to go wrong rather than what's going to go right. It really helps you because, and this is going to be a topic that I'm going to discuss quite a bit today, but essentially, I think around 15% of the company. So it has about $1 billion market cap. So that's $150 million that management have. So I think that's enough incentive for them to do something. Now, I've looked through the biographies of some of the sellers, particularly the independent director, and you can I don't want to butcher the name, but you can see it on the article. I'm sorry, I apologize. It sounds a bit awful me saying that. It's an Indian name, and it's you just look on the article. It just doesn't ring off the tongue. I can't remember it right now. That gentleman is a billionaire, and he has invested in many, many, many different companies. So the fact that he's, this business went public, and then he's kind of selling some of his holdings. That's how venture capital works. Venture capital doesn't kind of buy and hold forever. That's the business model. You kind of buy and you sell, and that's, if you have a couple of really good picks, you kind of, that's how the business model works. So it's different to what we're doing on the public markets. So long story short, I recognize that is an issue that the insiders are selling, but at the same time, they still have a ton of money here. So I'm not that concerned if they want to take some money off the table. And the way that I describe this is, look, if they didn't want to ever sell shares, they would remain as a private company. That's how it works, right? You take your company public with the purpose of selling some shares over time. So that's not a big deal for me. And I saw, so I'm not going to touch more on that at this moment in time, but I believe that once some of that revenue starts to surface in next year's 2025 revenues, the business may end up growing even faster than 100%, which analysts had expected. It's a small company. As I said, there's only about 2 or 3 Wall Street analysts following it. B. Riley is one of them. And they kind of feel like, it may end up growing at about in the ballpark of 100% next year. I think it might actually end up growing substantially faster than that next year as well. So 200% this year and more than 100% next year. So I think that there's going to be an opportunity for, as the business scales, to reach the gross margin break even. And we, this type of inflection, when it works, it's quite rewarding. And I think that is something that I'm very positive about. At this moment in time, I'm going to leave that there, if that's okay, because I've got to, unless you have a question, Hasi, do you have a question on the LUNR right now?
No. Thank you for those explanation. I was just, see that in the morning, curious, didn't have time to finish all.
That's fine. I'll press on because I've got quite a few things that I wanted to talk about. So the topic of today was about going nuclear. And, when it comes to investing, the market likes simple ideas. And in my experience, simple ideas work best, but you need to know what is a simple idea, okay? And it's quite easy to overcomplicate things in the market. So I strongly believe that there's going to be a demand for modernizing the grid. And on that, there are 2 stocks that I'm interested in. One of them is a producer, Uranium Energy Corp, and one is slightly higher up the chain, is POWL Industries, that are responsible for services to do with electricity distribution, okay? Selling the equipment for electricity distribution. So very, very different on the surface, very, very different. One is a business that literally just started mining in August. The other one has a different business model, and part of the hesitation of investors was about that backlog. So the backlog, POWL Industries, had been stagnant for 3 consecutive quarters, and investors are like, oh, this is not like a real growth industry. And, you know, people believe that, I can't explain these kind of things, but anyway, some people believe that POWL Industries has something to do with super micro computers, and the fact that super micro computers has difficulty publishing their SEC filings, therefore POWL Industries, which has like nothing to do with it, seems to be affected, and so on days kind of seems to trade on a similar path with just for a short amount of time. It's kind of, now it's detached. But yeah, anyway, so I've seen a lot of people say, oh, POWL Industries, that's going to be like this next Supermicro. And I'm like, no, please, like, think. Just, you don't have to think a lot, but just think a tiny bit. Anyway, so as always, I think it's really, really important. And so I'm talking about Uranium Energy Corp. Ultimately, the only driver of this business's upside potential is going to be the price of uranium. Okay, so whatever you take away from today, I'm going to talk for many different things about Uranium Energy Corp, but just focus on this: is the price of uranium. The price of uranium stays where it is, the thesis didn't work out. If the price of uranium goes to 90, kind of thing get interesting, and if it goes above 90, this will work out very positively. Okay, now all the different aspects are coming together right now for the price of uranium to start moving up. But until it does, it's going to, the price of Uranium Energy Corp is going to kind of languish, kind of go up and down, up and down. But I'm quite hopeful after the amount of news that I read on Friday and over the weekend about Microsoft tying up, well, the contract I think goes out for 20 years, and I think it's about 16 billion. Microsoft is kind of being on the hook for 16, I think it's around 16 billion over the next 20 years of for access to energy from Constellation Energy, SEG, CEG. So this is one business. Microsoft is one hyperscaler that says, okay, we need to make sure we got enough power for our data centers, predominantly AI, really. That's one thing. The other business is Amazon, which partnered up with a company called Talon. TLN is the ticker. And I believe they may possibly be in a few weeks, or maybe, not shortly thereafter, perhaps Meta or Alphabet will say, actually, we signed up with a different utility as well to make sure that we have the energy requirements for our AI data centers. So there's a confluence of aspects driving this, and it's just a matter of time before the price of uranium starts to tick up towards 82, 83, and this whole uranium sector is going to go up and to the right. Now, what I believe in my idea is particularly attractive about Uranium Energy Corp is that the business is unleveraged. Unlike Cameco, which has already contracted out a lot of its uranium pounds up until 2028. They have something like a ladder in the contract, but for all intents and purposes, if the price of uranium next year goes parabolic for whatever reason, like not parabolic, let's just say it goes to like 100 or 120, Cameco is not going to benefit that much more. It's like it might make a few scrapings there, but it's not really going to change the whole setup there. Whereas for Uranium Energy Corp, a business that until like, a few weeks ago was in hibernation and was not producing any uranium, this is going to change the setup quite dramatically. So that's about Uranium Energy Corp. And now about POWL Industries. So as I discussed, POWL Industries is very much focused on the services around the electrical infrastructure. So it has really not that much to do with AI and data centers in the sense like Supermicro, but it's very much about making sure that companies, electrochemical companies, have access to the equipment to ensure that they have their energy needs met. So this is something that you always have to think about. You always have to think about people's expectations and what's the financial situation with the balance sheet. Now, in the case of POWL Industries, the share price has rallied a little bit in the last couple of weeks, but while looking at it right now, but I estimate about 14% of its market cap is net cash. So it has no debt, it's just cash. So that's generally a really good idea to get behind. Incidentally, I feel like a business that generates a substantial amount of free cash flow and is priced, let's say, I don't know, now maybe 15 times free cash flow, but with a lot of growth potential, good things can happen. So I'm just looking for that re-rating in POWL Industries. And now I'm going to talk about the last part of my topic because I've waffled on for way too long. So when it comes to building a portfolio, you have these ideas, these themes that I discussed already about Uranium Energy Corp and POWL Industries. You have these themes, but you don't want to be too dogmatic about your ideas. The way it goes is it's not about trying to be smart. It's about trying to make money. And this is, a subtle difference, again, going back to Charlie Munger. Show me the incentives, I'll show you the results. So by being accountable, and that, whenever I discuss my investments, I say, listen, I made a mistake in Giga Cloud Technologies. I made a mistake with Ouster. I always talk about my losses because I think that gives me a certain amount of accountability, and I want people to know when things are going well and when things are going badly so that they can make their own judgments about things. Ultimately, what I really want is a loyal following. And to get that, I have to describe along the way the good days and the bad days. Now, I feel that it's fair to say that I will compound at 15% per year. And if anyone on this call feels that that's too little, I'm not the person for you. I'm always very clear about that. At the moment, I think it's around 22% for the year, but obviously it's a bull market. So, everyone's making money. But I feel that it's important to ground people's expectations. And to be honest, mature with each other. That's how we grow, our trust in each other. And the way that I build a portfolio is that, listen, you must always think about this. Pretend that you are already a millionaire and that you're working to preserve that capital. That's what you're trying to do, preserve the capital. So you don't do these kind of, you only live once type of investments and kind of, I call those heroes heading for zeros investors. Those people that, get really excited about something like, Palenter, like people shout from top of the rooftops. I'm like, dude, I was there recommending Palenter at 10 and no one cared about it then. So, you have to be quite savvy in these kind of things, like to not fall too much into the narrative because these narratives change quite quickly and there's no kind of memo that goes around to say, you know what, now the top is in. You have to sell into that strength or you're going to be a forced seller into the weakness. So you need to be cognitive of that all along the way. The second aspect is diversification. And I discuss at length about POWL Industries and Uranium Energy Corp. But you have to think about diversification of portfolio. So I have PayPal, which has absolutely nothing to do with Uranium Energy Corp or POWL Industries. So you have to think about investing in businesses with different growth profiles, so that when interest rates change, you're not left like, oh my God, what shall I do? Do I buy? Do I sell? You want to be able to position the portfolio for survival. But once it can survive, then and only then can it really move forward and thrive. And finally, the last thing I want to say is it's really, really important to not put more than 5% into any position, no matter how rosy the outlook, no matter how exciting, no matter who's buying what, when, which CEO said what. Like, I've been through these cycles, and it's always like, oh my God, acceleration, and this is like the next mega cap, blah, blah, blah. It's really, really important to understand that you don't know jack about the company. You can spend all the time reading whatever the company puts out in terms of the press releases and the PR and whatever the hell they spin out of it, but you don't know jack about that company. Jack, you don't know anything, man. And they sometimes don't know anything. So you know even less than them because they just spin out the story. So you need to invest with thinking about preserving your capital. And that's it. Okay, if anyone has any questions they want to ask, this is a really good time.
Hey, Michael. This is Devin.
Hi.
My question is on the ones that are not performing well, like Innovix and Ouse. In reading a lot of the articles that are out there on them, Innovix seems to have a story that it's still going to come back. It's just waiting to get the battery out there. Mm-hmm. So the long hold absolutely makes sense. But with Ouse, are you feeling anything on that one? Because there's a lot of articles that are saying it's a cash burn and it's going to go down even further, that they're not ever going to get anything out there in profitability. Is there a point with the stock that you look at it and say, okay, not only did it not hit what I was expecting, but it's going the other direction so badly now we should get out at this point? How do you make that determination?
Thank you so much for this question, Devin. Thank you for coming on the call. So I explained straight up that I made a mistake with Ouse and that I downgraded that price target to 12. So what I was looking for, I'm very specific in my articles in that I say, listen, these are one or two variables that I'm looking at. In the case of Ouster, I suspected that they were going to be growing their revenues at about 35% year over year, but actually they grew at 29%. That's quite a big gap because at this stage, when you are a small business, I follow a lot of companies, and that's the great advantage that I have is that I build a mental model. And when you're a small company, man, it's really easy to outperform. It's really easy if you are in the right sector at the right time. And you can be the best manager, like what's that Buffett quote? If you find a boat that's leaking, your energy devoted to getting out the boat is probably better than trying to stay in the boat and try and repair it. So with Ouster, and I always knew that they're burning cash. That was not the problem. And my thesis had been that they're growing at a sufficient speed that they don't need to raise more than 40 million in equity. So that is still probably right. I feel that it might be still right. But if they're not growing at the speed that I suspected, the original thesis has not worked out. And when Q3 comes out in 4 weeks' time, I will reappraise the situation. Now, I just want to say one thing here, that oftentimes the narratives get very negative and the share price is coming down and the narratives build on themselves. And this works on the two sides of the equation. So you have to be quite mindful of that, because I've been through that situation where I believed other people and the share price is going down and everything's going down. Now, I always say, just, it's better to take thoughtful action with the facts. Hypothetically speaking, results come out in 4 weeks' time, and it's a bloodbath. People were already expecting a bloodbath. That's why the share price is down more than 50%, even close to 60% at this point since I recommended it. So that's already in the cards. But if they come out and it's actually not that bad, there's a potential for this story to reappraise itself, because it is a growth business. It's just that the sector right now, and they're doing the best in the sector for what it's worth. Now, about Enovix, slightly different there. So Enovix and Uranium Energy Corp are two of my stocks that I hope to hold on for quite some time. I always expected that Enovix would be a 2025 story. I've always said that. They really need to get out and build the factories. And they've already built the factories. I think they built the Malaysian factory for the next generation's GN2 line in last month. So when they report in a few weeks' time, in 4 weeks' time, they may have some more positive news there. So this one, I am a bit more kind of hands-off. I'm not that concerned about it. Obviously, I recognize that it's a drag on my performance, but this can go quite well and can go north quite well. So I'm not overly dramatic about that. I'm much more concerned about Ulster. And again, I want to be transparent with that and always tell people, what's good, what's bad.
No, and I appreciate that. And I mean, USC, did I get the code right? UEC worked out great. Walked in on that one. I loaded up more around the 450 point. So it's already up substantially for me right now. And I'm kind of looking at the same thing with Oust. As it pulls down here between 5 and 6, is it smart to go ahead and average down if it still has a long-term story?
I personally would not. And this is what I said before. It's better to go with the facts. Look for the earnings to come out. When the earnings come out, even if the share price is up for hypothetically 25, 30%, the setup can work quite well from that point. Even after it's up 30%, it can work really well because there will be a change in the narrative, and that could work really, really well. There's no point playing a hero right now. What I always say to people is, listen, there's always another stock coming. You don't need to kind of keep averaging down and be like buying the dip. Like just it's sometimes it's worthwhile to either buy something else or just sit on your hands. And this is easier said than done. I recognize that. This comes with experience, but I want you to trust me that there is earnings seasons coming up in 4 weeks' time, and like things are gonna, I'll find something that is interesting. Don't buy anymore at this point. Just sit on your hands.
Yes, just like I said yesterday, hardest thing to do is do nothing.
No.
Thank you.
Thank you. Is there any other questions? Hi. Hello, Tom. How you doing?
Good, Michael. Thank you. Look, I saw you picked up Pinterest. Can you comment on pins?
Hims and hers?
Pins, Pins.
Oh yeah, so as I said before, there's a lot of stocks that I like to follow. You talk about Pinterest, right? Pinterest.
Right.
Yeah. So there's a lot of stocks that I like to follow, and I like to keep my tools sharp. I'm not going to invest in Pinterest. I have no interest in investing in Pinterest. I just like to think about it. I keep it refining my tools, because what I'm trying to do is form a journal for myself so that I can look back in 6 months and say, okay, this is what I thought. This is how it worked out. Could I have foreseen at that time, or did I foresee at that time what was going to unfold later on? So yeah, I have no interest in investing in Pinterest.
Thank you.
Okay. Is there any other questions today?
You mentioned CPNG, Chipang or whatever, the South Korean. Yeah, thank you. That's doing well. I took a swing at it, and it's going up slowly and constantly. And I just want to thank you for that. And yeah, thank you.
Thank you, George. George, thank you so much for coming on the call. Really appreciate it. I know it's early for you. You know, I have a lot of subscribers that are North America, US based. And after how things unfolded with PDD, I didn't want to take my subscribers on this kind of, because for a lot of American subscribers, anything that is not US is like, oh my God, this is like really scary. And even if North Korea, sorry, even if South Korea is nothing to do with China, it, you know, if the markets are not bullish, these types of things can blow up like that. And that's why I hesitated to make it a recommendation for deep value returns. Cool. Okay, I think that's all for today. If anyone else has any other questions.
Yeah, Michael, real quick. You mentioned PDD. I know we